Hello guys, welcome to another Palaview market research video. Today we are going to be talking about Palaview's second stock report, published completely for free in our Telegram. And if you want to see that and download it as a PDF, you can click the description and it's in our Telegram group. Now, why are we publishing stock reports? I'm going to cover this again. It is our duty at Palaview to provide you guys with the best information, the best education, and the best opportunities that we identify in the marketplace, irrelevant of where it is. If we feel that cornmeal is the best opportunity for you to be participating in, we're going to tell you why and how, blah, blah, blah. We're going to break this all down for you, okay? Every freaking week. We're doing a little bit of doubles the last couple weeks because we want to start helping you guys think about where you will park your altcoin gains that we deliver to you. If you're a subscriber, it'll be a little easier. So that's a little bit of a precursor to what we're doing here. Okay. So in this report, we are covering Vodafone Group PLC, which is a British multinational telecommunications company based in England, and it has this massive worldwide presence. Okay. It, as you can see, pretty much the main things it does is provide mobile phone services and fixed line broadband internet. It has operations in about 21 countries and it partners with a bunch of other organizations to extend out into an additional 44 countries. And it used to be this subsidiary of a company called, where is this? Um, Rackle Electronics, which was the UK's largest maker of military radio technology and back in the 80s. So became an independent company in 1991 and became one of the largest mobile telecommunications companies in the world. Now, this company has some similarities with Brookfield Infrastructure Partners, which we talked about last week. It is a infrastructure play. So it is one of these businesses of last resort, like I like to kind of, highlight here, where if everything goes to shit, right? What are the last things that are going to get paid for? It's like your water bill, your electricity bill, your Wi-Fi bill, your phone bill, right? These are the things that will continue to be paid for even if consumer spending generally goes down in the marketplace for like luxury goods and things like that, right? So, let's talk about their shareholders because this is actually a very interesting signal and this is one of the reasons why I decided to make this report. So, the Emirati Investment Authority has purchased about, I think it was 1 or 2 years ago, they purchased an additional 10% of this equity. And they currently have a stake of about $3.38 billion in this business. And they are partnered with an Emirati based company that's also in mobile telecommunications to expand and work together to do more things in the Middle East. Okay, which is a great signal for Vodafone. Now, I want to skip down to how Vodafone generates revenue. Okay, it is primarily through mobile subscriptions, so they have a recurring revenue model, which we love to see. They have a fixed line broadband, which is also a monthly recurring revenue in the form of providing essentially internet Wi-Fi services, right? Like they purchased Liberty, which is actually the same provider here in Puerto Rico, but they purchased, and we'll talk about that later, they purchased their subsidiary, which is based out of Europe. So they bought like Liberty Europe. Um, they do a lot of enterprise services, so like some B2B business stuff. They do network infrastructure and some like equipment sales on the side things, okay? And so if you want to understand the fixed line, so like literally like the lines of broad, like the, fiber optic cables, right, that they own, they are currently, providing internet to about 1.22 million customers, right? Just for their fixed broadband customers in the UK. That's it. And they have fixed broadband around the entire world. And we'll talk about their percentages in a second. So you can see actually here just how much market share they have. So you can see that they have about 10% of all of the, yeah, fixed broadband in the UK. So they own 10% of all of the fiber optic cables essentially that are in the United Kingdom. They currently have a very strong presence in these European markets. So they do about 30 for their mobile telecommunication business. They have about 30% of the overall total addressable market in Spain, 25% in Portugal, 30% in Hungary, and they have a lot of interesting plays going on in South Africa too. So they've got like 24% market share in South Africa, 40% market share in Egypt, which is a massive, massive market. And then they've got these other interesting businesses that I really like these mobile financial services. So they have this like app, like it's kind of like a mobile banking app, and they have like 80%. Like they've onboarded a huge amount of users in India and Kenya, which are obviously emerging markets, and that's like one of the latest initiatives, right? And on this map, you can kind of see all of the markets that they're hitting and the amount of, are they showing? Yeah, millions of people connected. So let's see. This is what I was kind of referring to earlier, right? So EAT, which is what they're currently called, or Emirati Telecommunications Group, um, they I guess last year, yeah, so 2023, they made this purchase of 10.4% in Vodafone. Okay, so this is like a really, really big deal. And it's interesting because it hasn't really been showing up in the stock price, in my opinion, not a financial advisor, and barely even a professional at this. So let's actually skip down. Um, Actually, we'll talk about before we get to that. Let's talk about this acquisition of Liberty because this is actually really, really interesting. So they bought Liberty Global's European operations, right? Like I was referring to earlier. They're the same. They're the people I pay Wi-Fi to in Puerto Rico. Okay, the same corporation. So they sold their European arm to Vodafone for 18.4 billion euros. This basically covers mostly Germany, Czech Republic, Hungary, and Romania. I think they onboarded another 10 million customers who are paying a monthly payment, right? So recurring revenue, really nice, predictable cash flows that we like to see. Um, yeah, so over 54 million cable and fiber optic network. And yeah, so if we keep going here, we can also see that they're doing this awesome partnership. There was basically this big merger in 2018 between some of the largest telecom companies um, in India, and they brought in Vodafone to kind of become like a member of that merger, but not like almost. I don't really. It's actually kind of vague how they talk about it, but they call it like a strategic partnership, right? But where Vodafone and this other group owned about 44.38% of that merger, right? So you can look into more details on that later. And obviously, look at these numbers, right, guys? I mean, these are huge amounts of people. I mean, we're talking about tens, hundreds of millions of people who are being serviced by this company, okay? So if we skip down here, you can see this stock price, right? Which is very interesting to see, especially relative to their financials, right? So when we look at these stocks and equities where we have all this financial information, we can look at things that are like multiples, right? So every business has a multiple on top of their gross revenue, their net income, right? So it's basically like their market cap divided by their either their revenue or whatever, right? And so you define how many times over do they, so like for a small business, say, if you're selling like your laundromat, you'll probably only get like 2 to 2.5 times your total annual revenue if you were looking to sell that business, right? So if you look at this, like they're having very nice, healthy growth and like, nothing crazy, like pretty, safe growth here, but growth nonetheless. And their revenue is holding well above in the 40 billion range, right? And this net income and profit margin for a business of this size is pretty extravagant, guys. I mean, this is $11.84 billion of net income, okay? So and obviously a 25.9% net profit margin, which is very unusual. But what's even more interesting to me is actually their balance sheet. And so if you see their balance sheet for a business like this, they have this great assets to liabilities ratio, right? They have got a lot more assets than they have liabilities, and they have a lot of cash. They got $20 billion in cash just sitting there so that they can either, in go after another acquisition. They can go and invest in more and build more of these systems, right? These utilities and all these things, right? And the other crazy thing is that they're currently paying, because the stock price is so low, as you see, relative to the value of this company. Because as you can see here, like this was in 2019, right? And so they're trading at a much lower multiple than they were even 5 years ago, even though I would argue that the characteristics of this business, because this business is extremely inflation proof, right? Which is something that if you read the Brookfield Infrastructure Partners document, you would have learned. I didn't talk about it so much in the video, but this is a crazy inflation proof business because things like the utilities that I like keep harping on, right? The things that people pay the last, right? Those are the things that adjust to inflation the fastest, right? So people who study inflation actually study these businesses to understand what's happening with inflation, right? So these businesses notoriously make money in high inflation environments, okay? Because you can see they're currently paying a 10.85% dividend, which is like really confusing in a way, given the financial strength of this company, unless they're hiding something in the numbers and there's something that I'm not able to identify, which is very, very possible. Very, very possible. So, yeah, that is pretty much it, guys. I mean, they are, I guess, like if we talk about the risks a little bit, they are a little bit dependent on the 5G network as a strategic play, which is can be a good thing and can be a bad thing, right? I mean, that is, I would say, their biggest potential exposure, right? So if Starlink grows and has like a market adoption that's about, I don't know, 5 to 10 times more than people are expecting it to be, then that could be a problem for a company like this. But otherwise, this is a business with a huge amount of staying power. And I really like businesses like this that have, this very competitive advantage. They have, things that are very hard to disrupt, and just, they're just in a nice niche, right? And like I keep saying, fire last resort, they are providing essential goods and services to people that will be the last things that people pay for, and if the economy goes poorly, right? So that is today's video. I hope you enjoyed it and are learning a lot from these reports. And if you have any questions, please DM our Instagram or comment here in the YouTube, and I'll try to get them. And of course, if you have any video ideas and things that you need clarity on, let me know. Okay? See you guys.